What's coming is actually much worse than EV's market crash. Think the current EV market crash is bad? Well, what's coming next is even worse. Let's dive into why the supposed electric revolution is facing a bigger and more complex set of challenges than anyone anticipated. Full electrification unlikely. First, let's start with this. We keep hearing all this hype about EVs being the future, but let's face it, full electrification isn't happening anytime soon. The EV market was growing fast at first, but now it's hitting some serious roadblocks. People are not buying these things like they used to, and there is a good reason for that. First off, the middle class, which is supposed to be the backbone of this whole EV revolution, isn't jumping on the bandwagon. Why? Because there aren't many good reasons for them to switch from their reliable gas-powered cars. EVs are still expensive, the range anxiety is real, and finding a charging station can be a headache. For a lot of families, the math just doesn't add up. But it gets worse when we look at the global picture. Many parts of the world simply don't have the infrastructure to support a massive switch to electric vehicles. Think about it. In regions where access to electricity is limited or unreliable, expecting people to buy EVs is like putting the cart before the horse. They need stable electricity for homes and businesses before even considering EVs. And let's not even get started on the environmental cost of producing all those batteries and the electricity to charge them. Industry experts are already saying that EVs will never make up more than 30% of the global market. So we're being sold this dream of a fully electrified future. That's just not realistic. Instead of solving our problems, the push for EVs is creating new ones. The focus should be on practical, immediate solutions that work for everyone, not just the wealthy or those living in tech hubs. Inadequate infrastructure. Let's talk about another hurdle facing the EV market: the woefully inadequate infrastructure. Sure, EVs sound great on paper, but the reality is that the charging infrastructure just isn't there to support a mass adoption of these vehicles. Here's the deal. The US is way behind on the number of chargers we actually need. Experts say we need around 180,000 chargers by the end of this decade, but right now we have less than 40,000. That's a huge gap. Automakers are trying to bridge this by planning a network of 30,000 chargers and adopting Tesla's charging standards. But even that effort falls short. Think about the logistical nightmare this creates. You're on a road trip, running low on juice, and you have to spend valuable time hunting for a charger. And when you do find one, there's no guarantee it'll be working. Reliability is a major issue. Many charging stations are plagued by maintenance problems, software glitches, and even vandalism. So you end up with chargers that are either out of order or painfully slow, which defeats the whole purpose of convenience in the first place. Then there's the cost. Installing and maintaining these chargers is not cheap. What do you think is going to foot that bill? Eventually, it's going to come out of our pockets, either through higher prices for EVs or through taxes and subsidies. Plus, the electricity to power all these chargers has to come from somewhere, and our current grid isn't equipped to handle that kind of demand. Automakers pushing for EV adoption are facing a tough battle. They try to sugarcoat it, but the infrastructure problem is a massive roadblock. It's like trying to sell a smartphone without having enough cell towers. The technology might be there, but the support system is not, making the user experience frustrating and impractical. So while we're being sold this shiny vision of an all-electric future, the reality is much grimmer. The infrastructure simply isn't keeping pace with the growth of EVs, and until it does, full electrification remains a distant dream. We need to face the facts. The EV revolution has hit a snag, and it's not something that can be fixed overnight. It's time to pump the brakes on this electric fantasy and focus on practical solutions that actually work in the real world. EV sales growth slowdown. For a while, it seemed like electric vehicles, or EVs, were on an unstoppable upward trajectory. They were touted as the future of transportation, with everyone from environmentalists to tech enthusiasts singing their praises. But recently, the momentum has fizzled out, and now we're staring down the barrel of a potential market crash. The reality is that EV sales growth has decelerated significantly. Pun intended. When the market first took off, there was a lot of excitement and early adoption by those eager to embrace new tech and show off their eco-friendly credentials. However, the initial burst of enthusiasm has faded. The general public isn't as quick to jump on the bandwagon, and there are a few good reasons why. First off, the cost of EVs is still a major barrier. Despite promises of falling prices, many EVs remain expensive, especially compared to their gasoline-powered counterparts. Incentives and tax breaks do help, but they don't fully bridge the gap. For many consumers, especially those in the middle class, the price difference is a deal breaker. Then there's the issue of range anxiety. Sure, some high-end models boast impressive ranges, but the more affordable EVs still struggle to offer the kind of mileage that makes people feel comfortable ditching their gas guzzlers. Long road trips become logistical nightmares, with drivers having to carefully plan routes around charging stations. Speaking of which, the charging infrastructure is another big problem. We've already talked about how inadequate it is, and that certainly plays into people's reluctance to go electric. There's also the practicality angle. EVs aren't as versatile as traditional vehicles in many cases. If you live in an apartment or a place without easy access to charging, owning an EV is far less convenient. And let's not forget the performance in extreme weather conditions, where EVs can struggle more than conventional cars. With these factors in play, it's no wonder why EV sales growth is slowing down. The market is saturated with early adopters, and now it's struggling to convince the average consumer. This slowdown is raising alarms about a potential market crash. If sales continue to stagnate or decline, the industry could face serious financial repercussions. Automakers have invested billions into developing EV technology and infrastructure. If the market doesn't expand as predicted, those investments could turn into huge losses. Bottom line is, in the end, the EV market isn't the unstoppable force it was once thought to be. The slowdown in sales growth is a clear signal that the market is reaching a saturation point. And without significant changes and improvements, we might see a crash sooner rather than later. Automakers abandoning fast electrification plans. The fact that automakers are hitting the brakes on their ambitious electrification plans is another sign that trouble is coming. It's not just a minor slowdown. Big names like Ford, Chevy, and several European manufacturers are seriously rethinking their strategies. The reason? The harsh reality that fast-tracking the EV transition isn't as profitable or feasible as they once thought. For a while, the push for electric vehicles seemed unstoppable. Automakers poured billions into developing new models, building factories, and marketing EVs as the next big thing. But the glittering future they envisioned isn't panning out. One of the main issues is profitability. Despite all the investments and government incentives, many companies are finding it tough to turn a profit on EVs. The cost of batteries, the need of extensive R&D, and the slow pace of infrastructure development are all biting into their bottom lines. Ford is a prime example. They've delayed several of their ambitious EV projects. Instead of rolling out new electric models at breakneck speed, they're taking a step back to reassess. It's not just about the technology, it's about whether consumers are actually ready to buy these vehicles, and right now, it seems they're not. Chevy is in a similar boat. They've also scaled back their electrification goals. The initial excitement has given way to a more cautious approach. They're finding that the market isn't growing as quickly as they'd hoped. Consumers are still hesitant, largely due to the high costs and lack of a comprehensive charging network. European automakers, who were once leading the charge towards electrification, are now also pulling back. They're facing the same issues: high production cost, uncertain demand, and a fragmented charging infrastructure. The initial optimism is being tempered by a sobering dose of reality. This shift in strategy is a clear sign that the auto industry is waking up to the complexities of a full-scale EV transition. The hype was one thing, but making it work in the real world is another. The slow market growth is a significant factor. With sales not meeting expectations, companies are wary of pouring more money into projects that might not pay off. In essence, the dream of a rapid, seamless transition to electric vehicles is hitting a major snag. Automakers are realizing that they can't simply flip a switch and expect the market to follow. There are too many hurdles, from cost issues to infrastructure gaps to consumer reluctance. This course correction by major automakers is a big deal. It signifies that the road to an all-electric future is going to be much bumpier and slower than many anticipated. For now, it looks like the internal combustion engine isn't going anywhere. It's a stark reminder that while the idea of EVs is appealing, the reality of making it happen is far more challenging. If you enjoyed this video, please subscribe to the channel to enjoy more videos like this.